Recording. Hey guys, my name is Boris Revzin. I'm the co-host of Blockchain Brief, where every episode we interview innovators, investors, and founders in the blockchain and crypto space. Today, I'm excited to have Kyle Samani, the co-founder and managing partner of Multicoin Capital. Hi, Kyle.
Hey, Boris. Glad to be on the show. Thanks for taking the time.
Yeah, we're really glad to have you here. Would you mind introducing yourself and giving a quick background on yourself and your co-founders?
Yeah, absolutely. So I started programming when I was a kid. Grew up in Austin, Texas. Got into computers when I was 10 or 11 years old. Studied finance at NYU. Thought I wanted to work on Wall Street. Realized while I was in college that was not my life calling. Came back home to Austin after college. Started my first tech company when I was 23 called Pristine. Pristine built software for Google Glass for use by surgeons. Built that company, raised venture capital, sold it. Then found myself unemployed in January of 2016. Spent a couple months playing video games, and then I discovered Ethereum in March of 2016. And Ethereum is what really drew me into crypto. Spent about a year learning, just investing on my own, diving deep into technology, deep into history, and investing, and then made the decision in May of 17 to launch a fund. The fund went live on August 1st. And yeah, today we have 8 full-time employees. We've got a bunch of awesome marquee investors on board, growing super fast. My co-founder Tushar is my best friend. We met at NYU 9 years ago. He studied finance as well. He did work on Wall Street for a little bit, was unhappy. He built his own tech startup, raised venture. His co-founders are still running that company. And we kind of got into crypto at the same time and kind of dove down the rabbit hole together, and then made the decision to finally work together and launch a hedge fund together.
Great. And so you mentioned that you have great investors. Can you share what part of the finance world your LPs come from? Are they traditional institutions, wealthy Bitcoiners, a mix?
Yeah, so our investors include a number of pretty high-profile venture capitalists on the West Coast, a number of VC firms directly, and then on the East Coast, a number of pretty prominent hedge fund managers who run good-sized hedge funds on the East Coast. I'm not, unfortunately, at liberty to disclose their names publicly just yet. We are going to be announcing that in the next couple of weeks, but it's not yet public.
Have you seen LPs, generally speaking, from the sort of major institutions start to take the leap into investing in the type of hedge fund that you operate, or are they still sort of hesitant to expose themselves to this market?
So like traditional LPs in terms of family offices, and then in terms of foundations and pensions, I'll kind of cover those 3 buckets. So family offices, there's a group that's like, this is crazy, this is fraud, this is nonsense. That group kind of, that's still very substantial. Maybe I could probably more than half family offices, I think, still feel that way. There's another half that's like interested, exploring, and then there's probably 1%, maybe 2% that have pulled the trigger and invested. And then, kind of look at endowments and foundations. I think their allocation directly to crypto today is basically zero. There might be 1 or 2 exceptions, but it's close to zero. And then pensions almost certainly is zero. Direct exposure. Now, a lot of these folks are invested in venture capital firms, and those firms have invested, so they have some kind of indirect exposure. But in general, their direct exposure is basically zero.
Got it. And when LPs and funds sort of think about this current regulatory environment, has this created an enormous set of challenges for fund managers, or is this mostly overblown and we're just sort of figuring things out as we go?
There's a set of challenges that come in terms of custodianship and those kinds of things. Like they're real challenges. They prevent the big money from getting in. But like the problems are being solved. For example, we self-custody today, but we're moving to a third-party custodian provider in Q2. That's a very high priority item for us as we start competing for larger checks from larger institutions. That's just like something we just cannot have the liability in-house, and so we have to outsource it. And there are options that are becoming available to do that. So that's kind of resolving itself. The other challenges are things like even marking prices, mark to market, to use CoinMarketCap, to use on-chain FX. What if you include green exchanges? There's a lot of, I'd say, pretty basic questions on how you mark things and value things. It's definitely squishy. It's not firm. I'd say that's, in my opinion, given the volatility, that's less of a deal breaker than anything else. If you're comfortable with 20% swings in a day, then like a 2% marking difference doesn't really matter. But this is a big deal. The fact that you've got basically everyone in the space has a substantial illiquid, carve out is different. Hedge funds oftentimes have the opportunity to do side pockets or kind of illiquid carve-outs. It's just very rare. It's typically an exception and not a norm. In crypto, it's a norm because everyone is evaluating pre-ICOs. So, you've got the sidecar constraints. It's like a lot of different dynamics. None of it, the only thing that's weird is probably the self-custodianship. Everything else is like, these are normal-ish types of hedge fund issues. But there's just more of them. They're more common in crypto than they are in traditional equities world.
Great. And I've heard you speak on previous podcasts and video interviews about the challenge of custodianship in the crypto world. My understanding is that you had an in-house solution and are still using it as you start to switch over to, it sounds like, a third party. Are most larger folks starting to switch over to these third party solutions because they want to sort of separate themselves from this pool of capital?
Yes.
Got it. And in terms of the fund, it's again, just hearing your past interviews, it sounds like you do both ICOs and secondary markets. Are you focused on one or the other more so, or is it just sort of fluid for you because as these ICOs become liquid, you decide whether to average in or average out depending on the performance and fundamentals?
Yeah. So our product, we offer investors is a liquid hedge fund product. Mm-hmm. So we optimize, although we have a tech background and we sound like tech people and like do kind of the deep fundamental analysis and rigor. Most of the people who have that orientation trends more towards the pre-ICO, more illiquid strategies. Although we have that background, to trend towards a more liquid strategy. So we are 90% liquid and about 10% illiquid. And we intend to maintain that ratio. Our legal docs allow for a little bit more flexibility, but our kind of target ratio is 90-10.
And to your knowledge, how does that compare to other crypto hedge funds in the space? Are most of them trying to remain as liquid as possible, and that's part of the benefit of working with them? Or are there many that are starting to focus exclusively on ICOs?
I know there are crypto hedge funds that are 30%, 35% illiquid. So like that's not, the more West Coast oriented you are, the more probable that is. The more East Coast oriented you are, the less probable that is.
Got it. And in terms of a recent investment, I know that you've published phenomenal write-ups on your website, and I've read some of the work that you've done. Are you able to describe a recent investment and maybe talk about your typical investment size or just how you think about putting in large or small positions?
Yeah. So we recently invested in Cadena. This is not public information. Cadena did a private round a month and a half ago or so. We participated in, and they're doing another round here, I think now or very soon. We're going to be adding more into that round. Cadena is a smart contract platform, so kind of conceptually, it's an Ethereum competitor. It's in the same general bucket. Cadena makes a very, very different set of trade-offs technically in terms of basically everything: proof of work, consensus algorithms, how they're handling scalability, how they're dealing with some of the trade-offs that come with scalability. The actual nature of the language itself in which things are programmed on top of it. Cadena is, in my opinion, the most unique of the major smart contract platforms. And I love the team. Will and Stewart are spectacular engineers, and they have understand these issues better than almost anyone on the planet. They've built working products before at big companies. At Cadena, prior to launching a public chain, they've already shipped and delivered private permission blockchains. Like fantastic team, super compelling set of technical options in front of them, and I think it's going to be a very interesting. I think they're going to attract a certain set of businesses that need a certain set of requirements in terms of blockchains, and they're going to offer a very unique value prop.
So it sounds like having a product in the market is important for you guys when considering the fundamentals of an investment. Is that the number one thing that you look at? You've mentioned sort of West Coast versus East Coast. In my experience, the West Coast investors typically look at product first. Are you also approaching even the more liquid investments like that?
Yeah, we are. So even the things that are liquid doesn't mean they're like any substantially less risk other than you have no illiquidity risk. It's liquid now. But besides that, I'd say the underlying fundamentals risk is not substantially different between most of these things. And so our number one thing always is what's the problem? What's the solution? If it works, how big can it get? There are reasons to do a deal even if you're not necessarily comfortable or even if you think the probability of success is low. If the convexity of the opportunity is high enough, that justifies, small allocations. So, I mean, everything is, I hate saying it depends, but it just depends on team, product vision, market opportunity, current valuation, right? We only invest whenever we think there's an opportunity for massive gains. I mean, if there's not a path to 10x or more, it doesn't make sense. Like I'd rather have my capital somewhere where I think it can 10x. And so, that's just the kind of basic level. We don't ever do any ICO flipping or like short-term kind of focus. It is an actively managed portfolio, but we don't buy into things saying like, oh, yeah, we're going to get out in the next 30 days. Like, that's never our intention.
Kudos to you. I think that's important for the ecosystem. So switching gears a little bit, are there any surprising parts of the world where you're finding crypto and blockchain innovation happening?
I mean, it's definitely a global movement. There are very competent teams all over the world: Europe, South America, North America, Asia. I don't think I've seen any teams in the Middle East off the top of my head, although I'm sure there are some compelling teams, just not coming to mind. But in general, it's pretty globally distributed. I will say that Silicon Valley is now like accelerating very fast. It is, crypto started much more global. I expect there's going to be a little bit more centralization around Silicon Valley just because the number of, just the amount of raw talent that is getting into crypto, and these guys know what they're doing and they have capital, and they're near the VCs, and like every engineer in Silicon Valley is asking themselves, why am I still working at Google? Why don't I go start something in crypto?
Do you see opportunities within these larger organizations for folks to be intrapreneurs and focus on blockchain projects happening internally, or is that not as prevalent?
I mean, blockchain is fundamentally disruptive to most of the major tech companies. Facebook, right? Like their network effect is the data. So like, what are you going to do? They're not going to, like put the consumer data on a blockchain. There's like stuff Facebook and Google can do on like making their server-side operations more efficient. And like, I'm sure they'll do that stuff, but that doesn't change the business at all. It's just like helps them save some money on some stuff here and there. So like, that's not strategically compelling. It's just a cost saver somewhere. There's lots of that they can do. I spent time talking to colleagues and peers in the industry about kind of the opportunities for the big tech companies in the space. It's generally, if you like take blockchain and say, well, what is their current business? And then like apply blockchain to it, it's generally like value destructive to their existing business. Will they try and leverage blockchain and do something kind of tangential or crazy? Like, who knows? I mean, like Facebook could create a Facebook coin tomorrow. Like, there's nothing stopping them. I don't know if they will, but like they could do it, and they have obviously a platform to distribute it and stuff. And like, maybe they'll do something with that.
So I follow your blogs and I follow your Twitter, where you're quite active and you are a thought leader in the community. I imagine that many of these ICOs and even the large enterprise companies approach you for advice, not only investment. Does Multicoin, or do you individually act as an advisor to any of these companies, or do you guys only focus on the investment side?
Yeah, so we don't do any advisory work at all. We don't take on any advisory roles, even like when we invest, in terms of additional kind of work around projects. It's just, this space is overwhelmingly unregulated, but it's going to become more regulated. And so our kind of priority is just like, we need to be as clean as possible. We're very transparent about our positions and how we think about things. We don't like the GPs personally aren't trading crypto outside the fund. So we're just very clear that like we just want to avoid any semblance of a conflict of interest in any capacity. So we only invest with the funds. Once we invest, we will roll up our sleeves and get hands on and be value accretive. I am helping right now 2 different teams in a substantial capacity, and I intend to help more over time. Those will kind of go through peaks and troughs in terms of energy level over time. But absolutely, like we want to roll up our sleeves and be value accretive. If we're not value accretive, like we don't just want to be dumb money in space.
Perfect. So I have one more question for you. I read your thesis and your projections on 0x, which we at Blockchain Brief found fascinating, and we've written several articles about it. And we're also hosting a decentralized panel here in Boston on March 16th. This was written, I think, several weeks ago. You wrote it before the market had this huge upswing, and now it's had a downswing, where 0x has retained much of its value. Are you still bullish on this investment? Do you consider it something that you're going to continue to follow and track? or has sort of this decentralized ecosystem slowed down where you expected it to speed up?
Yeah, so we're super excited about the future of decentralized exchanges and the 0x protocol and the team. The 0x protocol and the team continue to be one of the most active product shippers in the space. They're executing and delivering on a very aggressive and consistent timeline. So we love seeing the kind of progress they're making. We love the vision for the protocol. It's one of the protocols that just like when you think about all the things crypto can do, it's like, in my opinion, like one of the most obvious and powerful things is, any two parties can trade any two arbitrary digital assets trustlessly. Like, that's it, kind of conceptually. And it's a super powerful concept. And it's just still in the early days of all the things to iterate on for the protocol itself and then build on top of it. We're super excited about the 0x team. We're super close to them. I was actually hanging out with Will and Amir 1 or 2 weekends ago at ETH Denver.
Awesome. Well, thank you so much for joining the interview. Where can our audience find you online?
Yeah, so I'm super active online. Please feel free to engage me kind of wherever. On Twitter is the best place. I'm very active on Twitter. My handle on Twitter is just my name, Kyle Samani, Kyle Samani. And then you should also go to the Multicoin website. Our website is multicoin.capital. And then you can check out our blog there. And if you're interested in our blog, you can just subscribe to our blog. There's just an email box at the top of the page. And every time we publish new research, which is about once a week, it'll be in your inbox.
Perfect. Well, Kyle, thank you again for joining the interview, and we look forward to catching up with you in the future. Thank you.
Awesome. Thanks, Boris.